Hello, everybody. This is Brandon from Galaxy Stock Market. Today is Saturday, August now. Holy cow! It's August 3rd, 2024. It's about 9:29 p.m. as I make this video, and I wanted to get an early start so that you can prepare for the coming week. And guys, stock market is crashing. We've been warning you about this for a couple of months as well, that the divergences and everything else that we warned about is now coming to fruition. And so we want to talk about what to do now that everybody kind of sees that we are crashing and the reasons behind it, and how I think that the markets are going to set up for next week so we can increase our maximum profitability going forward. Before we do that, here's the disclaimer. Pause it, read it. If you agree, please move forward watching this video. One thing I do want to say is that last week we talked about how to trade July 29th to August 2nd. And, this is significant partly because of Jerome Powell the previous week. And I had mentioned that, Powell's probably going to be, the presser is going to be the one that we wanted to wait for. And boy, did that ever pay off. So if you didn't watch this, it's still instructive for you to go back and watch it. I know my videos are long. You're going to want to watch it. I have basically all the chart analysis, the stocks that I'm looking at. We're going to look at some proprietary information on the macroeconomics as well as the internal stock market data. All right. Of course, my shameless plug on x.com/galaxy.market. A lot of good intraday news and items worth posting, and my own thoughts throughout the day that I can't put on YouTube. All right, guys, we're in recession. Okay, I've been hinting at that. And if you follow me on x.com, I've been showing you various data and retweets from industry leaders as well as my own set of data. But we are in a recession. Okay, the Fed wants you to believe that the jobs are expanding at a healthy clip, that the consumers are fine. It's just like I said, it's a topic for another day. But I do believe the Fed is doing this on purpose. They want to try to hyperinflate out of the 35 trillion plus debt that we're in. And they don't really care about maximum employment. They don't. Are you kidding me about the 2.5% inflation? Pretty much what he said was that he's not confident in the data at all, and it was a very hawkish statement. And of course, then we have Japan, which we will talk about in a second. Now, I do believe Black Swan is going to come out of there. I always thought it was going to be Germany or China, or maybe U.S., but it may be from there, and that this is what this is all about. But of course, do not forget about my hashtag consumer demand destruction. All right, look this up. You will see all of my posts associated with that hashtag, and it'll give you an idea about what to do going forward. All right, let's go through some news. Okay, the biggest news, news item right now that we need to talk about is that, Warren Buffett is basically selling half of his Apple stakes. He's dumping Apple, folks. He's also raising cash at an alarming rate. He pretty much signaled the top. Now, we got short on Apple post earnings. And, just as an aside, I don't like to brag about our performances, but we are kicking butt. All right. A lot of people have gone into incredible amounts. If you don't take advantage of this market crash, when are you going to do it? We trade on both sides. I'm not just bearish, but, my specialty is during the market crashes. And those of you, that are just scratching your heads, or, you've been buying the dips, or you're just not sure how to trade this, then you need to follow this channel. Email me and find out how we can work together, so that you can do 10x, 20x, 50x, 5x, whatever trades that your risk appetite tells you. However, shameless plug, but Apple stocks are being sold, and this is ringing the top of the market. Now, markets will not go down in a straight line, but I do believe that the rips higher are going to be sharp, short-lived, and you got to short these rips. Okay, but Warren Buffett has just rung the bell, guys, and Apple, which is basically the stock of choice in manipulating markets higher, and it's part of the seven magnificent sevens. And even though they reported good earnings, I'm telling you, you needed to short that pop after earnings. Now, war drum continues here in the U.S. as the clown show continues, just throughout everywhere, just from our political, geopolitical aspect. But this is real. This is significant, folks. All right. And Israel just took out, Iran's, what is that? Hamas is not Iran, top leaders, and there's going to be retaliation. I do believe that there is going to be intensification and war drum beat towards World War III. Pay attention. Do look at what they do, not what they say. Now, the other thing is, this is by Zero Hedge. Look at this. Cash-strapped consumers are pulling back on beef purchases, right? Well, I guess that aligns well with WEF, where they think we ought to be eating bugs. But even if you wanted to eat cattle, most of the people are out of jobs, despite what Powell tells you on his presser. They're out of jobs. They're maxed out on their credit cards, and their inflation is rising. So cattle markets are being rattled by recession, and this is one of the key barometers that you want to look at to see if we're in a recession, and this is something that you want to be following. I mean, have you looked at the steak prices lately? All right. And then, of course, Powell thinks that the economy and job is still strong. As he says that we are full frontal, in-your-face recession. We are in a recession. Look at all these layoffs that happen. These are mega companies, including Tesla. Tesla with 11,000. I mean, just pause this and look at this. There's been over 60,000 tech layoffs just here in the first half 2024. Okay. All right. And then yet, the presidential candidate, I'm not going to name, whoever, they're touting how strong the economy is, how the jobs have grown, or Fed Powell stating that the jobs have grown. That's total BS. Okay. And then, of course, and I told you the banks are going to be leading the way. And if you haven't seen my video on bank failures, I put it out a couple months ago, and you might want to watch that. But here we go. All right. These are all zombie banks. Every single one of the banks, including JP Morgan Chase, they're insolvent without the discount windows, without the incessant money printing of US dollars, and buying and selling at the same time of the US bonds by the same entity that creates them. The banks are going to collapse. But I think that Japan is going to help us accelerate that, which is, I don't wish this upon the world, but you know what? Nothing got fixed from the 2008 financial crisis. So here we are. And then next thing you want to look at is the mortgage applications. Is basically, in 2024, it has plummeted, right? And so all of those homes bought by private equities, BlackRock, Blackstone, Carlyle Group, I don't know. And then all these flippers, right? It's like, I don't know, it's anecdotal, but, a few weeks ago, there was a grocery checkout clerk that owned 3 homes. And, they're talking about it, and it was just incredible. And I think that really is the top, but here is the nail in the coffin. We're down about 50% from pre-pandemic norms. This is where we are. And this is, indicative, another indication of the recession that is coming. So, and then on August 1st, which is on Thursday, and I think this is what kicked it off, that Japanese banks are just taking it up on the chin, okay? And then, of course, the JPY US dollar peg is just getting blown out, and we're going to cover that in the charts today. So, it's not just American banks, it's the global banks. And the next financial crisis, it's not going to be commercial or investment banks. It's going to be the sovereign banks or the central banks that are going to be in trouble, all right? And I think that, there's an old saying that the bankers create wars. Well, look around. It's just like everywhere you look, everything is distorted. From the Olympics all the way to our presidential race. We're not even sure who the president is at this point. But that's a topic for another time, okay? But look at the Japanese banks, okay? Japan has been the king of money printing, king of buying up their own bonds, and which the rest of the world is now copying, king of negative interest rates. I think this is going to accelerate, and it will be a contagion, okay? So it may be that it's starting with Japan. And then, of course, this is my own channel, galaxy.market at x.com. Fed Powell's laughathon. I mean, did you guys count how many times he clears his throat? Every time he says something that's not true, not always, but I would say 95% of the time, the dude will clear his throat. How many times did you hear that? Hey guys, recession is here, and they're not saying it out loud. Okay, this is a clown show, all right? And so I said, hey, finally, I think I also said that pay attention to the presidential race, right? I don't believe Kamala is a good candidate, okay? Democrats need to do better. But at the same time, I said the probability of a Trump win has accelerated since his assassination attempt. Here, I said it, all right? And that issue is real. And I said, watch the markets. They're going to start putting out more realistic numbers. All these employment numbers, inflation numbers are all made up, and then they revise them later when it suits them. But I think they're going to continue to create these numbers that are more in line and then blame it on Trump when he gets into the office. I think that's the case. I mean, I don't know why anyone would want to run for president, but I think the damage is done. So, folks, pay attention to this. The key level on S&P 500 or SPY, which is the proxy for S&P 500, is 528.85. If this level, they're going to basically fight this level. If this level breaks on a closing basis and on a 3-hour basis starting next week, you can be sure that we're going to be taking out the next levels. And we will talk about some of those levels on my chart analysis. All right. So let's get moving on that. All right, folks, let's start with the macroeconomics, right? McClellan Summation Index has completely flipped, folks. I mean, it's been super bullish as we were crashing down. And this is due to the distortions and manipulating the stock market on the backs of maybe 7 to 10 stocks total, plus all the banks that have been supported and bought and propped up by Federal Reserve or the central banks. But now the chickens are coming home to roost, as evidenced by what's happening in Japan. Have you looked at our banks lately? Okay. Yeah, we played the not Deutsche Bank, but Comerica earnings, and we did 21x on that trade. All right. When I'm making 21x on the banks, okay, time is near, and now we're in a crash situation. Here's the thing. All right. We have a little red blip here, which may be indicating, since everything is basically a divergence, that we may be getting, again, a little sharp relief attempt. And this is the mechanics of any type of bear markets or crashing markets, is that you're going to have a couple days to intraday rips that come out of nowhere that is powerful. Everyone's going to think that the dip buyers are out and the bull market's starting, or the bottom of the market is in. Do not fall for that old adage. Do not catch a falling knife, folks. And this is where we are. So basically, I still believe we are inverted on the McClellan Summation Index. This little blip is telling you that we need to pay attention for a potential bounce. But what else is new, right? What I say last week, I said you got to game the bounce after Powell. And that's exactly what we did. You rinse and repeat. All right, let's move on to our put to call ratio. All right. Despite the fact that we are crashing, we're still at 0.810. We have not gone above this level, which means that there is still complacency in the markets. A lot of people are saying, oh, there's going to be emergency Fed rate cuts, and that will come. But it's going to have to take a lot more sinister stories coming in, like a bank blowing up somewhere in the United States. Much like 2008, when Bernanke was opening up emergency overnight discount windows to stave off liquidity issues when banks didn't trust each other. And guess what, guys? Banks don't trust each other yet. We have our put to call ratio at 0.810. Okay, we need to be at least up into these levels, right? But we're not. Okay, that should be telling you the amount of distortion, the amount of correction or crashing that is going to be necessary to happen. Now, if given the choice, you have one or two choices. You can prop up the 10-year treasury, or you could sacrifice the stock market. Every single time, the Fed and the banks are going to save the bond market first, the credit market, at the expense of overly inflated, manipulated USSR-style stock market that we have today. So what happened to VIX? I told you about the VIX explosion, okay? we hit, for those of you that missed it, right around that 29.5 level. And then, of course, we retrace back. This is typical of VIX. It doesn't mean that we put in the top on the VIX, but, it's going to be volatile. It's going to be, if you haven't traded a crashing market, guess what? If you don't know what you're doing, both bulls and bears will lose money in this market, okay? Which means that you have to be able to anticipate levels and anticipate every tools available to you so you could beat the big boys. All right. Let's look at the weighted versus unweighted SPX. Okay. This top is the weighted, unweighted. Okay. This is the unweighted SPX, and bottom is the regular SPX. You notice the difference here is that on the weighted SPX, we finally formed a double top, and we're at a critical juncture. Like, it's formed that M pattern. Okay. If we start breaking below 5,600 next week, write this down, 5,600. All right. Here, I'll write it down for you, okay? On the SPX, you can correlate that with the ES, okay? This is SPX. But look at what's going on with our unweighted. Unweighted SPX is coming down more rapidly. Why? It's because the 7 stocks that are Magnificent 7 comprises about 50 to 60% of the entire market cap. Okay, think about that. Chew on that for a while. Okay, so what does this mean? There's more downturn coming, right? I don't think that it's going to go down in a straight line. Like I said, you got to short the ribs, right? But you also have to be understanding that there's going to be a lot of geopolitical news, a lot of intervention as things start heating up. We're in phase 2 of this down leg. There's usually 4 phases before the bottom happens. Okay, let's look at our 10-year treasury. I warned you that the Fed is going to smash down the TNX, which is the 10-year treasury yield. Okay, this is, remember, I've kept saying that the Fed wants to keep it below this 42.5 level, and basically it broke down from that level. And this is basically money printing to prop up the banks, because banks are holding a lot of non-performing, toxic 10-year treasury, 30-year treasuries. And if they don't adjust the yield, they're all going to go belly up, and they have not marked to market on their balance sheet. Okay, this is what's going on, folks. This is panic right here. All right, things aren't going too well. And the way you save this is that you sell off in the stock market, money flows into here. What's going on with the US dollar? Remember I said it's a race to zero, right? And basically dollar is now beginning to fall. Before I said strong rising dollar is negative for the markets. Right now, it's all assets are going to start falling simultaneously, but they are trying to save the credit markets. And the US dollar, there's devaluation. It's a currency war, right? If you don't believe me, just look at what's happening with Japan. And I do believe Japan is the one that is raising that salvo. This is Japan JPY USD. Okay, a lot of people like to look at USD JPY. I like to look at JPY to USD peg. All right, this breakout right here constitutes Japanese markets basically imploding. Okay, in the past, the yen was the carry trade overnight, where they could prop up different overseas markets. With the rising dollar, it becomes more and more expensive to rig the markets, and I believe we're going to continue to move higher. At this point, pay attention to this JPY peg. Okay, now let's go into SPY. Okay, really quickly. All right, so basically, yes, it was a hell of a sell-off. Okay, I told you that we got to wait for a pop and a drop. Okay, so last week was the Fed Powell statement. Okay, we popped on that and then we sold off. This week I said, hey, look, we're going to wait for a little pop. We went into this first sell zone, and now we are finding support at the 100-day moving average, and we should find some reaction here. So if you get some aggressive rips higher, yes, if you're nimble, you can play that, or you could just wait and be patient and wait for the rip and stall, and then start loading into this area as it stalls for the next leg down. Here is a couple of critical levels. 525, 523, and then into 517. If this level breaks, guys, we're coming all the way down into the 497. Remember, just 2 or 3 months ago, I was talking about 468 to 398. Those, as this accelerates, those are all in play, folks. You just got to know where the bounce points are. Here, I'm giving you some right to look at. right? Here's SPY on the weekly. There's a lot of meat on this bone, folks. All right, I know we're coming down on the RSI. RSI is, basically ready to go negative. All right, found support at the 20 SMA on the weekly and the rising trend line from the top. Right, we should probably try to attempt a bounce and then come right down this week. And if it breaks this trend line right here and starts getting into this below the 525, right? I told you the 528 level from the previous slide is exactly what you need to be paying attention to. Break of that means that we're going to lose its 20 SMA. We're going to take out these target ranges. These boxes are targets. I think ultimately we end up right down to here into the 200-day moving average, but it's not going to happen in a straight line. We may even get a couple of weeks worth of bounces. Okay, this is why you got to know your levels. Okay, this is the weekly on the SPY. Let's look at QQQ. All right, QQQ is even worse, and it's the same thing. RSI is like dog crap, and basically we broke down from this downtrend line, found support again at the 100-day moving average, okay, last week, and now we're coming into this breakout zone. This is the target zone 1 so I expect, near the lower end of the Bollinger Band, but I expect some form of relief bounce next week, maybe a couple of days. Okay, although it's not a couple of days, is it? It's just almost immediately, and then coming in to this trend line and then targeting this magenta box. Those are the levels that we may be looking at as this accelerates. Okay, remember, yes, you have to be careful about any type of a bullish news or the Fed action. Okay, I do think it's somewhere between now before September, the Fed may panic and start, cutting rates. Okay, but it's going to require a lot more. And I think a question was asked to Powell at the last presser if they're political. Oh, you watch what's going to happen when they start panicking. Okay, for everything that they've done. Like I said, I think they're doing it on purpose, but they want you to think that they're panicking, which is crazy. Here's the weekly on SPY. It looks awfully like QQQ. This is QQQ. It looks awfully like SPY, right? We hit our first target range. We should have a little bounce and then coming back down. I do believe we're going to have either we're going to chop around this week, or if we break down, we're hitting right here, 430 to 418 level. Okay, we got the basically the 50-day moving average, 50-week moving average hits 100, and here's the 200. Okay, see how that works? We have the MACD crossing over right now. I use a whole slew of indicators to help me. The CCI is basically negatively divergent. Look at all this room it has right here, right? That is a significant amount of room to fall still. Okay, and it's going to happen fast. Everything's going to be fast. If you're an options trader, be careful about the premiums and the gamma premiums. All right, and then of course PPO ADX is negatively divergent right now, meaning that it's bearish. Okay, we have my bearish signs. Okay, if you watch my channel long enough, although I've been only in existence for about a little over 2 months now, that's bearish. Okay, I'm racing through this because I have so many charts to get through, and then I may do more focused video next week if I have to. Apple. Buffett is dumping, folks. All right. Apple reported earnings, could not get above this 20 SMA. And here we are. We are falling. And Apple is going to fall at least down, okay, into this trend line, which I do not believe will hold, okay, as this accelerates. We're going to probably target into this 100-day moving average faster than you could say Indiana Jones. All right. There is some divergences prior to this, but I think these are going to play out as Buffett starts emptying half of his position, maybe the entire position. All right, look at what Buffett's doing. Okay, the guy is the sage of Omaha. He is selling, folks. It's important that you not become an exit liquidity and stop fishing for, the dip buyer. You're not that smart. I'm not that smart. Just go with the direction. I am telling you, we are in a market crash, market correction, whatever you like to say, but that's where we are. Okay, PPO ADX is bearish. All right. Now let's move on to Carvana. Carvana reported surprise earnings. Okay, and I think it's like Discover Financial. We front ran that and then actually played that earnings afterwards as well. And something isn't right. They did not disclose their subprime financing. They finance their cars in-house. And you know, the auto loans, used car auto loans, especially the subprime, is just the delinquency rate is at all-time high since 2008. Okay, they have not disclosed that, but I think the market's going to figure that out, aren't they? All right, this is fantastic, folks. I think by the end of couple of weeks, I think Carvana's going to be down here, maybe going all the way down and filling this gap all the way down to here. Okay, it's some fluff. They bought their cars. They have cars that they cannot sell, that they paid overinflated price to outcompete the local dealerships. All right, so Carvana, I'm super bearish on. All right, Nvidia. All right. I know Nancy Pelosi bought some more Nvidia. She's the greatest stock trader in the world. All right. You and I do stuff like that, we get SEC and FBI knocking on our doors, I think. All right. Regardless, expect a little bounce. They're finding support right off of that 100-day moving average. I doubt that they get above this 80 MA, but here are your levels. Look at these boxes all the way down. This has yet begun to sell off. Okay. And it's significant. All right. Tesla. Okay. Tesla, we did so well on Tesla. You'd be proud of us. Tesla has hit our levels. It didn't quite hit 198, but I think it's for next week. I think the target for next week are starting to find these support zones. Okay. Tesla has 1.8 million cars that are being forced recalled because their hood's flipping up. I've told you that I'm not a big fan of Elon Musk as well as his, shoddy cars. Here in Arizona, the heat makes those bonded bumpers fall off, and I see them from time to time, and I laugh. All right? So here we go. That's Tesla. I think there's more downside to that one. Palantir reports earnings on Monday. Okay, and so let's look at our friend Palantir. And I told you, I've been warning you that it's been pulling back and everything else, and I am bullish in the longer term. Now, it did find support at the 100-day moving average. Everyone's expecting good earnings. I continue to think that with the geopolitical instability and data mining with the NSA on our citizens, I think they're going to have a stellar earnings because I think we are turning into a police state. And so I think realistically, wait and see what happens, because if they report good earnings, this is going to go straight up into the 40s. Okay, but looks like it's forming a bottoming candle, so you want to pay attention to this a little bit. When you look at right here, MACD is bearish. Okay, and remember about 3 weeks ago I said, hey, I'm no longer bullish, I'm bearish on this, but we got to start looking now. What are we going to do for the earnings? You might want to join our group to find out, but I'm longer term bullish on Palantir. Okay, despite the market is crashing. Okay, so take that as it will. Not financial advice, but that's what it is. Let's look at Palantir for the weekly. All right, so here's our kind of a cup. Okay, inverse head and shoulders and a cup and a handle, whichever way you want to look at it. All right, it does look like it's formed like a cup, and then we're forming a high handle, and these generally tend to break down a little further, but earnings can negate a lot of that. However, the MACD is ready to form a death hook. When in Rome, it's going to do what the Romans do, and it is bearish right now. So we want to wait and see what happens with the earnings. Okay. But it's something that if it pulls back, it's something that you want to establish some long positions on. I'm long-term bullish on the stock. Airbnb, I am bearish on Airbnb, and it's been taking it up on the chin. And this tourism industry is consumer demand destruction. Enough said. You see where it is. Okay, even on the daily, I mean, it's going to go much lower. Everyone thinks that, oh no, it's bottomed, and it's what are you talking about? Wait for the pop. It's going to be a couple of days, maybe a week even. Okay, it's gotten into this first target, and I do believe on the weekly we're going to bounce. The question is, does it get below this downtrending line? I don't think so. I think maybe 1 or 2 weeks up here, but they are reporting earnings this week. If earnings are bad, guys, this is coming all the way down to here. All right, so if you made a ton of money, and I know a lot of you did, our group did, if you made a lot of money, these are the type of plays that you could pretend you went to Las Vegas and then put a few grand down. I mean, if you took 5K and you're at sitting at 60 to 70K, yeah, it's okay to take 2 to 3 grand and know that if you're wrong, no big deal. You're up. Okay. I'm not advocating gambling, but that's how you should be playing these earnings, right? Not financial advice. Upstart is reporting earnings. I know they're a $20 stock. This is the only $20 stock I'm going to be covering because I think Upstart is going all the way down after earnings into the 17.5 range. Okay. And why do I think that? Upstart is basically a fintech company that provides financing to subprime holders. Okay. And Upstart is basically in that industry. And guess what? Who's defaulting? Subprime loan holders and prime holders now because they're losing their jobs, inflation. They can't even put food on the table. But look at this PPO ADX. It's bearish, right? I mean, accumulation distribution, we're at the bottom. Can it go even lower? Probably. I think everyone's that sold has sold. There may be some bad news coming out of this, but if we start to continue to move higher above here, then there may be a trend change. But I am bearish on Upstart as well. Let's look at their weekly. All right. I mean, how can we possibly say that I could be bearish? It looks like, oh, somebody's saying it's so low. I mean, look, it kind of bottomed here. No, it broke this uptrend line. It's in this kind of this volatility box. All right. And I think if it's after earnings, it's going to come right down below 17.5. You can mark it. All right. I don't know what the IV percentage is going to be, but that's what I see. The other one that I'm super interested in is SMCI. They are also reporting earnings. Look, guys, it looks like it's found support right at this support line. Funny how that works. And it's got a long doji type of a tail candle reversal for sure, right? There's a little gap here. This could be a pop and a drop situation after earnings where it's going to stall out. And I'm sure there's going to be more shenanigans coming out and it will drop. And I'm going to look for that type of relationship into this box area. Okay. If it pops, then let it drop. All right. Especially if the market's melting down. Now we are due. Like I said, we are due every week. Unless something happens, we start World War III. Japan's entire stock market and their financial system crashes, or China does something, Iran, Israel, something. If that happens, yeah, we're going to gap down, right? And then we're just going to sell off. And we are in that danger territory. And the fear and greed indicator is, we're at extreme fear. Finally, okay? I think the fear has entered, but there's still stupid idiots that are trying to buy the markets here, all right? Do not short the falling knife, all right? So SMCI, possible bounce, and then a drop, okay? And then let's look at the other one. If you look at the weekly, yeah, it's super bearish. It broke down. RSI is getting worse. It found support at the 50 SMA on the weekly. I think it's targeting right 475 into this 100-day moving average post earnings. I'm not advocating front running. Like I said, if you made a ton of money and you want to gamble a little bit, I don't advocate gambling, but this is good place to try. But I think the earnings so far has been a pop and a drop situation unless you shorted Amazon. Okay. So like I said, the key level on the SPY to look at is 528.85, folks. A break of that, woo. All right. Remember, 3 months ago I was looking for 468. There's some unfinished business down there. Lots of earnings coming up. All right. And then so I'm just going to highlight some of them that I like. Of course, Palantir after Monday. That's going to be a huge one, folks. All right. CSX. All right. Remember UPS? Similar things going to happen to this guy unless, we find some market bottom, which is not going to be the case. Caterpillar, recession play, right? Recession. No one's building stuff. Okay. All right. And then the other one is SMCI. Okay. Rivian, I'm going to leave alone. I like Airbnb. Any other consumer demand destruction plays like Win. Okay. Reddit is hyperinflated, and you might want to look at that. And of course, Upstart, Shopify, as does Amazon, so shall Shopify. Walt Disney. Disney is a train wreck, folks, with their DEI initiatives. And oh my goodness, I mean, I'm afraid to show my kids. Thank God most of them are grown. Not most of them. What am I talking about? I have a son and a daughter. But yeah, I mean they're grown. So but if I had a 5-year-old, I'd be afraid to show Disney. All right, I don't even like going. It's not the happiest place on earth. I just don't like it. I grew up around there. I just can't stand Disney I hate Disneyland. I hate Disney World. Anything associated with Disney. Ugh. Oh, I feel like I'm going to vomit. All right, forget it. All right, so the other one that's going to be super important is HubSpot. I do believe this is consumer demand destruction play. Okay, this energy transfer is an interesting play, and you might want to look at that. Datadog, okay, kind of similar to Cloudflare and CrowdStrike. Depends. What are they looking at, right? And then, of course, Unity, which is the AI play, Trade Desk. Okay, so there's several. And then, of course, if you belong to our group, I manually scan every single one of these stocks to look for things that may not be found here. But Earnings Whisperer does a good job of pointing out the ones so that you can narrow your searches down. So here's the keys to next week, okay? Markets do not go down in a straight line. I've been saying that for weeks, right? So don't short the whole, okay? Unless, some big news comes out or, like I said. Also don't buy the dips. Powell did his best to telegraph a recession. Watch the banks and watch Japan. Watch the JPY USD peg. MSI has been divergent. It's continuing to remain divergent. And then earnings season in full swing. We already went over these. Pause it and read it. These are some things that I want to pay attention to. I am still bullish on Palantir, especially if it pulls back, okay? But I think they're going to do some earnings surprise, and Palantir moves after earnings. The last 3 earnings have been pretty significant to the upside and downside. Short the rips. Know your levels. 528.86 is the critical level, folks. All right? You don't have to join my group to get that one. You need to watch that level. Watch gold. If it takes out and stays above 2,500, it's your early warning signal, okay? And then, of course, my watch list, these are the ones that we're going to continue to look at. I told you about Carvana, right? Carvana is going to fall. They are lying to you about their earnings, okay? Patience is key. Know your pivot levels. Don't FOMO. Don't, chase after the dip. Okay, you and I are not that smart. Let the markets tell us where they're headed. There's more volatility ahead. Bounces will be sharp, short-lived, but it will induce FOMO to both sides. Remember, bulls and bears both get slaughtered during, most of them, during market crashes. It's a fact. All right. Follow me at Galaxy Doc Market. Follow me. There's a lot of good content there, and I think it will help you with your trading. Oh, of course, thank you so much for my YouTube channel. You guys are awesome. Even the bad commenters, I really enjoy you. Okay. And, let's make it a community. Okay. I'm not always right, but I do my best to give you the best data and best analysis that I can do. Okay. And, thank you. And, let's subscribe, like us, share this video. All right. If you want to work with me, like I said, I have some kind of the limited but value rich internet special. Okay. But we also have, our standard subscription membership levels. All right. And if you want to consult with me about something, about your trading's not going well, email me and let's figure out how to work together. All right. Otherwise, let's get some alpha. Be careful out there. Bye-bye.